Embrace Equity. That was a campaign theme for this year's International Women's Day. The Central Bank of Nigeria last week Thursday held a webinar to commemorate the annual event where an impressive array of panelists spoke on Digitize Her, Bridging the Digital Gender Gap for Financial Inclusion and Sustainable Growth. And on Saturday, the 2023 CBN Junior Tennis Championship held at the Lagos Lawn Tennis Club, where the young athletes displayed outstanding skills and tenacity on the court. We have details of this event and more in today's episode, but that's after this short break. Do stay with us.
Oh, I see. Just hold on in that case. Let me call out my PIN. It is 41...
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of. Even if they call your date of birth or your BVN, don't give them your security details. If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
The CBN Deputy Governor of Financial System Stability, Mrs. Aisha Hamad, on Thursday, 23rd March, hosted a virtual coffee table chat with the theme Digitize Her, Bridging the Digital Gender Gap for Financial Inclusion and Sustainable Growth to commemorate this year's International Women's Day. Delivering a keynote address during the virtual event, Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, urged women to leverage technology to bridge the digital gender gap, given that digital financial services are now critical to the economy. He said that digital financial services now provide the vast opportunities to bridge the gender gap, drive financial inclusion, and increase employment as well as economic opportunities for women. Mr. Emefiele promised that the CBN will continue to promote gender equality and financial inclusion among women through policies such as the Micro, Small and Medium Enterprise Development Fund, which dedicates 60% of funding under the scheme to women-owned businesses. Others include the Framework for Advancing Women's Financial Inclusion in Nigeria, which seeks to address gender gaps in access to finance, targeted onboarding of women on the central bank digital currency e-Naira, among others. The Deputy Governor, Mrs. Aisha Hamad, called for broad private and public sector commitment to gender parity and ensuring that women, youth and rural dwellers have access to digital financial services. She noted that despite increased digital mainstreaming, women were less likely than men to have access to technology, creating a digital gender gap that perpetuates women's economic exclusion. Mrs. Hamad believes that digital innovation could be the missing link and winning strategy for fixing the parity problem and deepening access to financial services. The special guest speaker at the CBN International Women's Day webinar, a senior partner at TLCom Capital and Nigeria's pioneer Minister of Communications Technology, Dr. Omobola Johnson, enjoined policymakers to make science, technology, engineering and mathematics STEM more attractive to women and girls and to grow their participation in the tech industry. She additionally canvassed for the establishment of special funds for female-led tech businesses to achieve greater participation of women in the digital economy. Nigeria's Minister of State for Industry, Trade and Investment, Mrs. Mariam Katagum, who was also part of the webinar, for her part, encouraged a focus on STEAM, that is, science, technology, engineering, arts and mathematics, adding that women's active participation in the creative industry should be encouraged. The message is clear: embrace equity and bring more women and girls on board. Another way the Central Bank of Nigeria is demonstrating its commitment to gender equity and youth development is through sports. Grand finale of the 18th CBN Junior Tennis Championship took place on Saturday, 25th of March at the Lagos Lawn Tennis Club. The competition saw some brilliant performances from the young boys and girls who displayed outstanding skills and tenacity on the court. Playing in the boys under 12 category at the Lord Women's Center Court, Abuja-based Chidubem Amasiani defeated Wisdom Effiong from Akwa Ibom 9-3 to emerge victorious, while Etoro Bask from Akwa Ibom claimed victory over Eunice Irolumon from Benue in the girls under 16 class by beating her 9-5. The acting director, CBN Corporate Communications Department, Dr. Isa Abdul Mumin, who represented the CBN governor, Mr. Godwin Emefiele, at the grand finale, handed both players their well-deserved trophies.
In the middle of two powerful men.
The event featured the Diara dancers during the halftime. Congratulations to the amazing young tennis players. Still on the commitment of the Central Bank of Nigeria to the all-round development of young people, male and female alike, the CBN commemorated the 11th edition of the Global Money Week across the country with teaching sessions for students. In Abuja, the Apex Bank last week Monday organized a Global Money Week walk around the central area to raise awareness on this year's theme, Plan Your Money, Plant Your Future. Thereafter, the students took turn to give a brief talk on the importance of inculcating savings culture in young people, as well as the benefits and types of savings. They learned about some of the objectives of the Central Bank of Nigeria.
You're welcome to the Central Bank of Nigeria. And I just want to tell you a few, let's say 2 or 3 out of the 5 objectives of the Central Bank of Nigeria. So 1, we ensure monetary and price stability. 2, we issue legal tender currency in Nigeria. And 3, we promote a sound financial system in Nigeria.
Global Money Week is an annual global awareness-raising campaign on the importance of ensuring that young people from an early age are financially aware and are gradually acquiring the knowledge, skills, and attitude and behavior necessary to make sound financial decisions and ultimately achieve financial well-being and financial resilience. 176 countries have taken part in the Global Money Week since it first was commemorated in 2012 and has reached 53 million children and young people. Many online and in-person activities take place during the week. Thank you for staying tuned. This is from the CBN, a weekly program that brings to you reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, attended the 2-day African Central Bank Conference 2023 in Johannesburg, South Africa, where he advised other central bankers as well as other financial sector regulators, to be more vigilant in their regulatory and supervisory roles to forestall any run on banks in their jurisdictions. Here's an excerpt from the conference.
It was also interesting that you channeled the governor of the Nigerian Central Bank as you were talking about political will, commitment, being at the table, walking the talk. And I think it would be remiss right now if we didn't defer to the giant of Africa, Nigeria, with nearly 200 million people and resources to match. Nigeria is very much the economy. When it's working, the rest of Africa is working. They too, like everybody else, face a lot of challenges. One of the biggest ones in Nigeria is the redistribution of resources in a country that's so wide, so diverse, and also has a very big import bill. And I think along with the leadership in the country, the tightrope that someone has had to walk is the tightrope that the Central Bank of Nigeria constantly walks. And the fact that you're still standing, Mr. Governor, means that over the last 9 years, you've managed this trapeze act quite well. His name is Godwin Emefiele. Please welcome the Governor of the Central Bank of Nigeria.
During the pre-COVID era, we saw interest rates at low levels. We saw monetary policy accommodation. And as a result of that, banks like Silicon Valley that were in a long period of low interest rate regime began to invest because in their portfolios, I'm not sure we saw large loans there, began to invest short-term funds, depositors' funds, in long-term investments. And because monetary policy became tight and unaccommodative, they began to see some losses in their mark-to-market issues. And there, of course, interest rates also went up. Because interest rates went up, depositors who needed to also access liquidity to meet interest rate or lending interest rate payment obligations, of course, started to withdraw money. In the course of withdrawing their monies, SVB started to liquidate some of those investments, and of course got to a point where it could no longer meet those deposit obligations, and that's where we are today. So the big question to the central banker is: we know why banks collapse, and how come monetary authorities have not taken the pain to take regulatory measures to avoid these kind of situations? A major reason that contributes to bank failures is when the bank is unable to meet its depositors' demand or deposit obligations for their monies. This usually results in a run. The South African Reserve Bank governor did talk about run has been a lifelong or decade-long discussions in the midst of central bankers about what happens. But the problem is that central bankers, do we really take actions, regulatory actions that should mitigate, not entirely eliminate runs, that is reduce the incidence of runs in our banking systems so as to reduce some of the systemic crises that we see. So if a bank collapses due to a run, why is it difficult for regulators to put in place regulations that will insulate the banking system from bank collapse? In 2008, when we saw the subprime crisis and the mortgage in 2008, that was the period when we saw Lehman Brothers, Bear Stearns, Washington Mutual came down. In fact, we're beginning to see that the risk of that contagion was beginning to get even the likes of Bank of America, the Citibank, the Wells Fargo banks, and the rest of them, until the Obama administration came up to begin to give them money for them to run their operations, and luckily, within a couple of years, they were able to get out of those problems, and they paid back those monies. Then, in 2008, I was still the CEO of Zenith Bank. And I took time to look at the balance sheet of Citibank, I think Citibank London. In that balance sheet, and if you can go through even if you Google and you check the 5-year summary of Citibank London, you will find there that deposit in 2008 was just about $774 billion. In 2007, it was slightly lower than that. Loans plus trading assets in the balance sheet of Citibank in 2008 was about $1 trillion. And in 2007, it was almost $1.3 trillion. So to regulators, is it safe for depositors that a bank has a deposit of $775 billion and loans and trading assets was over $1 trillion? What are regulators doing? How did regulators prepare themselves for this kind of crisis, what I call a rainy day, the day it begins to rain? How have you built an umbrella to ensure that depositors don't face the risk of losing their deposits? I think that must be a lesson to regulators globally. And I was watching CNN and I saw President Biden came up and said, look, we need to now strengthen regulations. We need to talk about how to protect depositors and the rest of them, because that is the reason he's had to come up to say, look, all depositors will not lose their money. They're going to be paid even if you have deposits above $250,000 with SVB or with any of those banks. What are regulators doing about this? In Nigeria, people have always said that Nigerian banking system appears to be one of the most regulated, in fact, stringently regulated banking system. And I'm sure people like Yinka Sani, who has been CEO in Nigeria now, Group CEO of Stanbic IBTC, they know what we're talking about. We've done a couple of things. We're not saying that there are no runs. We are not saying that there are no cases where the banks run into liquidity crisis in Nigeria, but we try as much as possible to make sure that we've done our best to make sure that we protect the banks and insulate the banking system from serious occurrences like this. I think it's only in Nigeria, amongst very, very few countries in the world, that you will hear about the Central Bank of Nigeria insisting that if you, a bank, you collect, say, for instance, $100 from a customer as deposit, that today, $32.5 of that money must be kept at the CBN. It is to keep that fund to meet this kind of situations when there are crises. It's only in Nigeria, or one of those countries in the world, Nigeria, that you will find that we insist that banks must maintain a particular level of specified liquid assets as a percentage of their deposits, which we call the liquidity ratio. It's in Nigeria, one of the countries in the world, Nigeria, that you will find that we insist that banks must maintain some minimum level of capital adequacy ratios. Indeed, we also insist that even when you grant loans, at least 1 or 2% of your loans, aside from specific provisions you make for loans, but when you begin to see that those loans are running into crisis, must be provisioned against bad loans and the occurrence of non-repayment of loans. It's Nigeria, in one of those very few countries in the world, that you will find in our banking laws that if you are a bank and you declare profit, if you are a young bank, after paying taxes, that 25% of your profit must be held in a statutory reserve fund to boost your retained earnings and effectively your capital adequacy ratio. These are the kind of things that regulators need to begin to look at increasingly, because it will be difficult for you to run away from crises like this where banks, in an attempt to make money, take unnecessary risks that will crystallize and create problem and may lead to their demise. So what do you do as a regulator to make sure that you're able to insulate your banking system so they don't run into those kind of crises? That is what regulators must begin to think of aggressively. And it should now be discussions that should be held at high levels to insist that regulators must now become more and more responsible about how to protect depositors' funds. We've often said it, even in Nigeria, that we believe that when there is a crisis, we must make sure that depositors are protected. So aside from this, even when situations arise, we make sure that no depositor loses its money. Since the banking crisis of 2008, when we had a few issues, we were not lucky to have the government coming to say that they are coming to make sure that all depositors must collect their monies. In 2008, when we had the banking crisis, the United States government came up and even said what Biden said this week about protecting depositors. But some of us in our own areas, we are not that lucky that governments will come and begin to say they want to use taxpayers' monies to pay depositors to ensure they don't lose their monies. What did we do in 2008? The banks came together with the Central Bank of Nigeria and created the Asset Management Corporation of Nigeria, where we created some kind of insurance fund, which till today banks contribute a percentage of their total assets into a fund, aside from all these other cash reserve or capital adequacy or liquidity ratio that I've talked about, which is meant that when there are crises, we can draw from those insurance funds to be able to bail a bank that runs into the crisis, particularly because they have overlent a lot of money. Like we know, all bankers, what kills a bank, one of the major reasons that kills a bank, aside from the run from depositors, is bad loans. And that's why regulators must begin to be very responsible and make sure everything is done to make sure that we're able to protect, in an attempt to protect the banking system, we must make sure that depositors are protected. Because when you look at the balance sheet of an average, even 5-year-old bank, in my environment, for instance, you will find that depositors' funds is at least running to almost 10 times of shareholders' funds in those banks. So effectively, we're beginning to see that banks are owned by depositors and not by shareholders. And that's why when crises arise, you find out that we don't mind doing away with the shareholders, but we must make sure that we protect depositors. So regulators must increasingly begin to think in this direction, otherwise we will begin to face this kind of crisis that will continue to result in runs on banks. I thank you very much.
Nigeria is a rich nation of green land, rich resources, countless crops and commodities sufficient to feed and provide a means of livelihood for her teeming population. Chin up, Nigeria, the giant of Africa. Exciting times are here. We can be self-reliant and grow our economy if we work together to explore our potential. It takes a whole nation. Let us get involved. Buy Nigerian to grow Nigeria.
It's a wrap from the CBN this week. You can report on resolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng, attach relevant documents. You can call the CBN Contact Center on the phone line +234 700 2255 226. Local rates may apply. Write to us through the email address fromthecbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I am Uli Emisi Dada. Stay safe and bye for now.